What up, what up, what up? Once again, this is yours truly, MJ Worthmore, legalconartist.com, and I want to say thank you for watching this video. 99 times out of 100, I can almost bet you, I guarantee you, you're watching this video right now because you bought a copy of my book. Now, whether you got the ebook version or you got the digital version, either way, you got a copy of my book and you want to see how I mark up my charts using the M2QLT, the market maker quarter level theory. It is an incredible theory. I want to show you guys exactly how I mark up my chart so that way you can see exactly what I'm looking for. I'm going to take you to a trade that I executed a few days ago, and I'm going to, of course, I already know how it played out, but I want to show you guys how I look for specific setups, how I mark off the charts with the Asian range, the London range, New York, depending on the time that I'm trading, and based on the overall directional bias and the overall currency strength that I'm looking at. So I want to take you guys to a trade that I cooked for like 30, 40 pips on GU. And it was a really good trade. I like it actually like melted. It was great. I want to show you guys what I did so that way you can start to see it for yourself and kind of see my process. So let's dive right into it, okay? So I want to share my screen with you here. And let's go. Okay, so first and foremost, the first thing that I do, so I am a person who trades the major pairs, right? I trade a lot of the pairs that have Euro USD. Like if you look over here on my watch list, I trade Ethereum USD, XAU USD, AUD USD, Bitcoin USD, NZD USD, Euro USD, GBP, blah, blah, blah. Like you can just tell, like I trade USD. And the reason for that is simple. USD to me is actually really easy to watch, really easy to predict as to what's going on when you understand a few key confluences and you also know to look for price action at certain price points. So the main thing that I use the DXY to see what the overall strength of the United States dollar is. The DXY is the US dollar currency index. So if you ever want to know if the dollar is bullish or bearish, and basically if it's strong or weak, then look at the DXY. And based off of what I'm seeing right now on the DXY, I am seeing a bit of an uptrend. So this is this right here. This is the 4-hour chart for the DXY, and I'm looking at a bit of an uptrend. And I see, June 2nd, this thing went really, really bullish, right? So this is actually what I was looking at all in all. When I first looked at this trade, I saw that price had reached a bit of a support right here and was turning around. So I was looking for the dollar to go strong, and the pair that I was watching was GU. So because I was looking for the dollar to go strong, I saw on the 4-hour chart, I saw this this bullish tweezer bottom right here at this area of support. And I saw the rise, and I saw basically the completion of this morning star here at the end of June 1st. I said, okay, June 2nd is probably going to start off being a bullish dollar. And if nothing else, you know what I mean? I know that I can go in for a really nice clean sell. So if I see any sell triggers above the Asian range, then I'm going to take it, right? That's how you kind of go into the market understanding and looking for your opportunities, and you just wait to see if it plays out, okay? So I was looking for a sell opportunity on June 2nd, June 3rd. So here we go. Let's go over to GU, right? So here we are on GU, right? So we're going to go into June 2nd. Now, first and foremost, I'm going to show you guys how I mark off my charts, right? So first thing I'll do naturally is I'll have my major level, right? My major 0 point. So I've got 1.4 here. Let me get this out the way for you guys, right? I've got 1.4 there. Okay, and now from 1.4 to 1.5, I know that I've got a 1,000 pip range, which means that 1.425 is my quarter level. Basically, this can act as an area of support or resistance. So I want to mark off 1.425, right, and see if price gets up there and if there's any kind of response, right? Because if so, then I'm absolutely looking for price rejection off of that quarter level, right? Now we've got a 250 pip range here, right? Between 1.4 and 1.425. So naturally now what I want to do is I want to find out what are my mini quarter levels, right? In between my two majors. And that's every 25 pips. So that would be 1.4025, 1.405, 1.4075, 1.41, right? So I don't want to put all those on because it'll drive you crazy watching me put all those numbers on the charts. But you'll know that realistically is your 25 pip increments, and right in the middle between 1.40 and 1.425 is what I like to call my median level between my quarter levels. So that would actually be 0.4125. So I will put that there, okay? 0.4125, okay? And I like to put my median levels in red, mainly because, like I said, I just want to see how price is responding. I want to look at price action, and I pay attention to price, right? I'm looking for response off of specific price points, okay? And as you see, 1.425 is acting like a nice area of support right here, and it could be shooting back up to the top to give us another rejection off of 1.425, which will make a lot of sense because price did reach up here, bounce off of it before, so we could be looking for that again, okay? So now what I want to do is I want to let the day play out a little bit, and I'll show you guys how I mark off my Asian range and etc. Okay. So the next day starts. I'll make my screen a little bit bigger for you guys to see. All right. So the next day starts. Let's play it. Okay. Now here's what I'm waiting for. I'm waiting for the consolidation period to end, right? Or the Asian range to end. I mark off my Asian range from 8 to 2. I've recently been doing it from like 8 to 2:45 because I know that the London market makers actually start communicating with Asia at 3 a.m. So that means the 2:45 open candle is the 3 a.m. close candle. So that really is your true Asian range, okay? So we want to see just how far, just how high and low the Asian range is gone, okay? So again, we're looking for sell opportunities. So an ideal sell opportunity that I would look for is I would look for there to be some kind of expansion to the high above the range, or either get rejection off the top of the range, give me a double top and then sell it down. That's what I would be looking for, right? But the higher it goes, if it gives me a really good entry trigger, even close to 1.425, or here goes another one, 1.42 flat, because that's one of those psychological key levels, right? That's a major, because between 1.41 and 1.42 is a 100 pip zone, right? You always want to pay attention to price action off of specific zones, okay? So I want to put that number there, 1.42 flat, okay? Just so I can see if I get any kind of price action there. If it breaks it and goes above it, I just want to see just how high it goes in case I get a really good sell trigger, right? Now, so what I've done is I've marked off my Asian range, okay? So now what I want to do is I want to find the high of the range and the low of the range and find the average price line, right? So the high of the range is right here. We can see it with our eyes, okay? We just marked it off from 8 p.m. Eastern Standard Time. That's 20 military time, 2000 hours. And then to the 2:45 open candle, which closes at 3 a.m. Eastern Standard Time, okay? Here, the high of the range is right here, okay? Now, if you look up here, you'll see your open price, high price, low price, close price for your candle. So I hover over this candle and I see that my high price is 1.41795, okay? So we'll keep that in our mind, 1.41795. And if you want to be super, super precise, then literally just grab your calculator, right? You don't have to be a math whiz to be a profitable Forex trader, right? So we just type that number in, 1.41, what was that number? 1.41795, okay? So 1.41795, okay? Plus, because we gotta find out what the low of the range is, then divide it in half so we can find out what our average price line is, okay? So here it is. This is obviously the low of the range, right? This is how low price went, that really, really long wick down there. You absolutely want to pay attention to candles like these because this is a hammer. And whenever you see a hammer, this is typically a trap move by the banks. Like they push price down to make you think that they're going short, and realistically just pull it away real fast so they can go long. So we actually may see price really shoot up because of this hammer right here, okay? But here's the low of the range. And the low price was 1.41442. So we add that now to the calculator. 1.41442, okay? Equals 2.83237, right? Now, if we divide that number by 2, that'll give us our average price line, which is 1.41618. I would realistically just round that to 1.41619. That would be my average price line, okay? So what I do now is I take a ray, right? And I take a ray over to the edge of the range. Boom, shoot the ray out, and then 1.41, if I want to be super, super precise, 619, okay? There it is. Now that is my Asian session midline. That's the average price line, okay? Now, the concept that I like to follow is the smart money, dumb money. Underneath the Asian session low is when smart money is looking to make a buy. Above the Asian session high is when smart money is looking to make a sell. So I want to follow smart money. If I see price shoot up high, I want to see it give me some kind of an entry trigger, manage my stop, and then go for what I know, okay? So now we want to let this thing play out and see if we can find our opportunity. Let's see what happens. Okay, now usually I'm on my charts around 6 a.m. looking to see what's going on. Okay, so what I want to do is I want to draw a vertical line here at 6 a.m. Right? Got it. 6 a.m. There goes my vertical line. This is typically when I start looking at the charts and I start reading to see what happens. So let's see what I would find come 6 a.m. Okay. So at 6 a.m., what do I have? At 6 a.m., price is obviously shooting above the high. Okay. So this says to me, you know what? I should probably be paying attention to see if I get some type of price action off this price point or off of the major quarter level above, right? I'm looking for price action. I want to see if I get some kind of seller trigger off of one of these prices, okay? That's realistically what I'm looking for. Also, I'll look and say, okay, cool. Between 1.42 and 1.425 is 50 pips. So between that, of course, is 1.4225, which is a 25 pip mini quarter level, right? So we want to make sure we have our mini quarter level there so we can pay attention to what's really going on. We want to see some kind of indication off of a specific price point so that way we know what the high is, what the low is, and then I'll show you how to find your target, okay? So let's let it keep playing out. Let's see what happens. Boom. So we got one entry trigger right here, okay? Now, this right here could be a trap, okay? This is typically where if I, and just in case I want to be really aggressive with the market, I would take position number 1 right here, and I would set my stop loss somewhere up here, right? I would take position number 1 because price could rally. Because another thing that I'm paying attention to is how many pushes do we have in one direction? Typically, when you start to see a major move or you see a move in one direction, you'll see typically 3 pushes or 3 levels, right? So my mentor calls them levels of rise and levels of drop. So I only see 1 push, a pullback, a second push. This is the second pullback. I could be looking for a 3rd push, right? So if I wanted to be careful, I could say, I see prices rejecting off of 1.42. I am looking for a sell, but I did not see a 3rd push. So I would have to be very, very careful with this trade. And if I did, this is where I would take a trade with a very small lot size, give myself a very generous stop loss, just in case it does push up, okay? And if it hits that stop loss, even with me having a generous stop loss of, let's say, maybe 20 pips, that 20 pips is only going to cost me, based off of my risk, about 2.5% to 3% of my account, okay? So let's just say I did go short right here for position number 1, all right? I just feel like being a savage, right? So what I do is I give myself a 10 pip stop loss above the high. The high right here is 1.4203. So my stop loss realistically would be like 1.422, okay? So let's go ahead and see what that looks like. 1.422 for my stop loss. Okay, what's that give me? That gives me a 30 pip stop loss. So that means for a 1 to 2 trade, I need to have a 60 pip take profit, right? Now, there we go. Now, the reason why that would even be realistic in my eyes, because 1, it will be coming underneath the Asian session midline. 2, it will be coming back towards a quarter level or that median level. So I actually might even take my profit at that median level because the banks trade in levels and I want to trade with the banks. So now I've got a 1 to 2.17 risk reward trade, okay? This would give me 65 pips if I kill this trade, right? That's where I would take position number 1 and I'd see if this stops me out or not. Because again, when you're trading with a good risk to reward ratio, even if you're wrong, when you're right the next time, it pays for your loss plus gives you profit, okay? So let's play it out. Let's see what happens. Looks like price is coming around. Okay, so check this out. Price gave us this push down. Now it's turning up. So here's where I really pay attention, right? Because I'm currently in drawdown. I would say maybe 1.42 is going to serve as my peak high formation, right? Maybe it'll come back to 1.42, reject again, and then melt down from there, okay? Or it could be giving me a third push up to the top, and it'll give me an even better entry here, right? So let's just play it out honest, okay? What we get. Now, here is where I feel really confident, because what this looks like to me is a double top, a lopsided double top. We got this peak high formation here, the dip down, the pullback. This is where a lot of retail traders will say, oh my gosh, you got to buy right here, because they're looking at this as an upward trend, not knowing that we're looking for selling opportunities. So because they're looking at this as an upward trend, they see this as a lower high, right, to buy in on so they can ride it up, not knowing that they should have been looking for a sell opportunity, and we have rejection off of 1.42. If you look at this, this is a tweezer top, and this right here makes the completion of a evening star, okay? So now feeling really confident about this trade. I would actually move my stop loss in, probably move my stop loss in halfway to bring it to just 15 pips, okay? Here's how I manage my trade. Now I've got a 1-to-4 risk reward ratio trade, and my entry is currently in profit. Let's play it out. Boom, just like that. And that literally is how we kill trades, legit. That is how we kill the trades, okay? Now we see here, this is a 1 to 4.33 risk reward ratio, 65 pip kill. Now we made our entry, right? We made our entry from the rejection of 1.42, which is, you know, it's a mini quarter level. And we got this picture perfect, beautiful, 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 beautiful evening star, right? So we took our entry right there, and all we did was we traded to a level that we knew the banks would more than likely go to. Now, could it go all the way down to the quarter level? Possibly. I don't know. I'm not greedy. I just wanted 65 pips, because when you got a good size account, 65 pips with one standard, that's 650 bucks, right? 2 standards, $1,300. Come on now. 4 standards, $2,600. Like 5 standards at 65 pips. Come on, you do the math. That's gonna be a crazy day for you. And I want you to think about this, right? This is the 15-minute time frame. We entered in this trade at 6:45 in the morning. By 9:45 in the morning, 3 hours later, we were done. Imagine if you threw a standard on this trade. You made $650 in 3 hours. Are you kidding me? Like, I don't know a lot of people. Well, I do know a lot of people, but they're typically drug dealers, and they probably are on their way to jail or have been to jail. But like, I don't know many people that make $650 in 3 hours. You know what I mean? And do it from their laptop, because during that time, I'm probably, you know, making breakfast for my wife. I'm chilling with MJ Jr., you know, I'm having some coffee, or I might even be doing a mentorship call with one of my students, you know, but at the end of the day, here you have a picture perfect opportunity to hop in and read price action off of price, understanding the market maker quarter level theory. The reason why we knew what we were looking for is because we know when it comes to market maker, like we said in the book, we're looking for accumulation, right? We want to see a tightening of price. The accumulation actually began back here. You know what I mean? But you want to see accumulation, then you want to see expansion, right? And you got to have the overall proper directional bias. Like, the only reason I knew to take that sell is because I knew that the dollar was going bullish, or I had confluences saying that the dollar was going bullish. And when the dollar is going bullish, that typically means sales on GBP USD, right? So because I knew the dollar was going bullish, and because I knew I was looking for sell opportunities, this rally right here, it didn't shock me. It didn't make me think, oh man, I should have been for a buy. Nah, I knew that this was an opportunity to get in for a sell. And granted, at 4:15 in the morning, if I took this move right here, I mean, how many pips was that if we jumped in on this bullish engulfing? We jumped into this bullish engulfing and just took that up to, you know, that 100 pip zone. That'd have been a nice 35 pips, you know what I mean? 34, 35 pips. But here's the thing. I'm not on my charts at 4 o'clock, 4:15 in the morning. You might be, somebody else might be. I'm not. At 4 o'clock in the morning, I'm not even awake yet. I'm waking up typically around like 4:30 or 5 o'clock realistically. And I'm going through my routine. You know, I'm reading 10 pages, brushing my teeth, showering, getting dressed, you know what I mean? And then after I've put myself in the right mind space, then I come to the charts, do my analysis, look to see if my analysis is on point, and I know what I'm looking for. This is how I've been able to quote unquote forecast the future for profit, right? We have no idea how far this thing went that day, because once my TP is hit, I'm done. I'm off the charts. I got my money for the day. I'm good. I'm not worried about it, right? This one trade would probably pay for a week because we deal with a decent size account. Let me say this to you right now too. Don't worry about the current size of your account. Worry about the skill set, because there are opportunities for you to become funded by other big time traders and big time trading companies. And what they want to know is, can you manage risk and can you cook up pips? That's all they care about. Because if you can grow a $500 account by 10, 15, 20% every month, then they say, well, if you got the skill set to do that consistently and the discipline to do that consistently, if you can do it with 500, maybe you can do it with 5,000. Maybe you can do it with 50,000. Maybe you can do it with 500,000. Maybe you can do it with $1 million, right? Like, I'm telling you, don't get a funded account with $1 million in it and they say, hey, well, go ahead, just keep growing about 20% because you've been doing it right here, right? This right here shows you. Now check this out. Here's the math on this. I risked 2% of my account. 1-to-4 risk ratio trade, right? Risking 2% of my account. If I got a 1-to-4 risk reward ratio trade, then that means I got an 8% growth. Now, the original entry, all full transparency, the original entry was 30 pips, right? So this 65 pips was a 2%, right, from the original entry. And so it was 2% for 4%. If you grow your account by 4%, if you do that, let's be realistic, grow your account by 4% 3 times a week. That's 12% growth each week. That's 50% growth each month. That's how you take a $500 account to $750. But it's the same skill set that takes a $500,000 account to $750,000 in a month, right? So I want you to pay attention to that. But that's literally how I look up my charts and how I cook up on these opportunities. Because once again, we know we're looking for accumulation, right? During Asia, expansion, which is the false move, a peak high formation, and then the trend phase, distribution. This thing could, no, I don't know. Let's play it out just to see. Let's see if it actually turns around or if it keeps going down. Yeah, I probably shorted myself. Did it go down more? Nah, see, yeah, it didn't turn around more. But see, that's okay. That's okay, right? The thing about it, it actually came back up. Check that out. Look at that beautiful rejection off of 1.42. We'll talk about that in another video. And this is a multi-session W. This is a multi-session peak low. If you got in for the buy on this one, oh my God, you killed that trade. But anyway, all in all, what you want is you want to know how to hop in for a move, right? Especially when you understand your pair's ADR, its average daily range. You want to be able to hop in for a move and not try to be greedy. You're not trying to catch 100 pips in a day, especially if that's not your pair's ADR, right? If your pair's ADR is 60, look for 20 to 30 pips, catching a prime move, right? Getting a sell off the high or getting a buy off the low, right? And just pay attention to price action at price. I cannot say that enough. Pay attention to price action at price. Of course, you need to have an overall understanding or bias about the strength, right, of one of your currencies. And again, this is why I trade the majors, because I can look at the DXY and see, is the dollar going to be strong more than likely, or is the dollar going to be weak more than likely? And if I see dollar strong, okay, I might be looking for sells on GU and EU and maybe even XAU USD. If the dollar is going to be strong, I might even be looking for buys on UCAD, right? If the dollar's weak, then I might be looking for sells on UJ. I might be looking for sells on UCAD. I might be looking for buys on GU and EU. I might be looking for buys on gold if the dollar's weak. That's how you look at the charts. But more than anything, this is how you kill the charts, based off of price. Market maker quarter level theory. We had our majors marked up, right? Had our majors marked up, and we got our minors marked up. Okay, so always pay attention to price. You got to think, banks like to trade in numbers that end in 0 and 5, right? And they like to think about quarters. Okay, so every 1,000 pip zone has 4 250 pip quarter levels in it. Every 100 pip zone has 4 25 pip quarter levels in it. Just little stuff like that lets you know where you should really start paying attention to price action at, okay? So I hope you found some value in this video. This literally right here just showed you how to cook up 65 pips, one trade, 3 hours, get in, get out of there, you got your money, right? You can do this almost every single day. When you really understand what's going on and when you understand the pattern, your currency strength, and the overall big picture, things that I will teach you. But if you found any value in this video whatsoever, then do me a favor, smash the like button on YouTube, because I'm pretty sure this is playing on YouTube. Smash the like button, subscribe to the Legal Con Artist channel, and if anything, get in contact with us. Figure out how you can join what we've got going on, because we teach Forex traders, regardless of level of experience, how to legally rob the banks. Why? Because that's where all the money is. Hope you found some value in this video. If you have, once again, smash the like button, leave a comment, subscribe to my YouTube channel, and I look forward to seeing you in the next video where I continue to add value to your life and continue to help you grow your account and cook up these charts. Once again, y'all, talk to you soon. This is yours truly, MJ Worthmore. Peace.